Yeah, good morning. Yesterday we saw US market correcting very sharply, almost around 4%. The reason is a few of the retail company declared result over there and has guided for poor performance in coming period. So that is giving indication that the high inflation has started impacting pocket of consumer, and consumers' buying power is reducing. So that has taken the whole market down yesterday. Apart from that, another reason could be like SEC, that is Security Exchange Commission, which is controlling equity market over there in the US, has also issued has sought information about uh, the chat of the private chat of our top 100 dealers of the equity markets. That is chat on WhatsApp, which is not secured. So that type of information SEC has sought from top 100 dealer from companies like Citi, Morgan Stanley, Goldman Sachs and all. So that might have impacted the sentiment over there, and that could have also impacted the market in the US. Taking even the futures are also soft of the US market, and if you see the Asian market, they are also seeing similar type of corrections, not like US, but anywhere between 1.5 to 2.5% corrections in the Asian market as well. Whereas if you see the commodity, oil is at around $110. Yesterday it was at $112, so some decline. Whereas aluminum is up by around 1% today morning in China. Copper is down by around 0.5%. Iron ore is down by around 1.5%, and steel is down by around 1.5%. Coal continue to remain high at around $330. See, the key concerns of the recent past is high energy prices, that is coal and oil. So though other commodities had seen some decline, but these two commodities are not seeing any decline, and until and unless these decline, we will not see inflation coming off very substantially. So Indian market is also likely to take a cue from the US market, and we'll see some correction in today's market. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we also saw that Nifty faced the immediate resistance around 16,400. Today's after global cues, Nifty open a gap down and open near the next important support zone, that is 15,900 and 940 level. If Nifty sustain this level 15,900, then we see the sideways movement. But if the first 20 minutes Nifty break this level and trade below 15,900 level, then we see the further sell off towards 15,700 and 15,800 at downside. Today, the intraday immediate resistance we can face near the 16,100, 16,250 in upside. If Nifty managed to sustain 15,900 and close near the 16,050, then we see the again positive momentum towards 16,300 in upside. But if Nifty trade below 15,900, then we can see the selling pressure in index. Bank Nifty also trading near the support zone around 33,750, and below that level 33,400, 33,000 at downside. Upside 34,500 is immediate resistance for Bank Nifty. Nifty Finance also trading near the resistance zone. Yesterday we also saw that Nifty Finance also take upside in resistance around near the 15,540, 560 in upside. Next immediate support place 15,450 for the 15,340 at downside. Upside 15600 is an immediate resistance point refinance. In stock specific, Bharti Airtel looks weak at current level. We see the yesterday that is selling pressure in Bharti Airtel is continuing today also. Next immediate support for Bharti Airtel is 670 and 650 at downside. Upside immediate resistance place around 705. So, and second one is power grid looks weak at current level. Next immediate target is 210 and 200 at downside, and immediate resistance place around 234. That is for technical derivative parent.
Yeah, thank you, Vikas. Good morning, everyone. This is Amit Guptani. So, as per derivatives data front, as we mentioned in yesterday's trading session, that in Nifty is likely to take the resistance of 16,400 level. As we mentioned, that this is just a pullback rally. Once if Nifty gives a possible closing above 16,400, then only we might witness a fresh buying in the market. Currently, the view for the market is likely to remain range bound between 15,700 to 16,400 level, and possible sell-off we might be witnessed from the upper resistance level. While in yesterday's trading session, we have seen that between 16,300 to 500 strike heavy call rider positions got added up, while on the downside, directly the next support for the Nifty stand out to be at 16,000 level, and below that at 15,700 strike for coming next 1 to 2 trading session. As you are seeing that today Nifty is likely to open around 200 points on a gap down note, so possibly the Nifty is likely to open around 16,000 mark. So after opening, once if Nifty gives a pullback till 16,100 level, then we might witness some possible cool off in the market and some sort of cool off in the selling pressure. But if Nifty manages to get below 16,000 level till first half, then we might witness the market scenario to be cautious, which might drag the Nifty more 100 to 150 points in next 1 to 2 trading session. While continuously we are seeing that in PCROI is trading between the range of 0.80 to 1.10 level, and continuously once PCRO is coming around 1 to above 1, then continuously selling is being witnessed once PCRO is coming above 1 level. So as we are seeing that PCRO yesterday closed at 0.87 level, so we are expecting PCR today to get open around 0.72 to 0.70 level, and it might drag downside to a 0.65 to 0.63 level, which was a low in last week trading session. From 0.63 level PCR, we have witnessed that the bounce back was witnessed in the market also. So there will be a chances once if PCR coming around 0.65 to 63 level, at that point of time we might witness again some pullback in the market. But current scenario for the market looks cautious, so till the time Nifty is not going above 16,400 level, till that point of time, no new fresh positions need to be created in the market. Overall long position should be holded with the support of 15,700 level. Thank you. That's it from the derivative front.
Good morning. Government has advanced the target of blending ethanol in petrol to 20% target from earlier to 2030 to 2026. So the government has advanced the blending target. Currently, if we see this year, the blending was around 10% of ethanol in petrol. So looking at the momentum and the seriousness of the government, we feel the stocks which are a proxy play on this theme will continue to do well, like Praj Industries and Global Spirits. We attended the con call of Acrisil, the quad zinc maker. Margins had been impacted by higher freight costs as discussed yesterday. However, post yesterday's correction in the stock, we feel that the margin, the new normal for the margins as per Q4 result has been discounted by the market already. Global migration from steel sinks to quad sinks continues to drive demand all over the world, and this should drive profit CAGR of 33% for next couple of years for the company, with stable ROC of 25%. Stock is currently available at 15 times FY24 EPS of 42 rupees. We feel fair value should be at least at around 20 times, and which should come during the course of this year. We remain positive. LIC Housing Finance result was above expectation, mainly because of lower credit cost, which came at 0.3% versus expectation of 0.6%. Gross NPA has declined to 4.6 from 5%, and net NPA to 2.7 from 3.2%. Stock is also available cheap at 0.8 times price to book. However, on the negative side, the loan growth is at just 8%, and even the disbursements in the quarter 4 was lower than last year Q4 disbursement. So that is a negative. Um, if we compare the growth with HDFC Limited, which where the loan growth was 15%, and the loan growth here is half of it, and so accordingly stock is valued much lower. But we feel as and when in future, if the company is able to accelerate growth towards 12-13% kind of loan growth again, then stock should head closer to 1 time and more than 1 time. Pre-COVID, the stock used to trade at around 1.3 times, but that time the loan growth was also at almost 14-15%. Manappuram result was below expectation. Over here, since last 2 quarters, if we see, the company had changed its strategy and wanted to go for aggressive growth in light of increasing competition. If it wanted to grow fast, it had to reduce its yields. So company again reduced its yields to 18.8% this quarter from 20% in December quarter. And mind you, before December, the yields were stable at 25% since many years. So this is a big decline on the yields front. And as I said, this is mainly because of higher competition. Because of this, the ROA trajectory has also changed since last 2 quarters. ROA is now coming at just 3% versus earlier levels of 5.5%. And accordingly, market has also reduced the stock price from 2 times multiple earlier to 1 time today. Even on the asset quality front, that had deteriorated in both gold and MFI businesses, whereas we are seeing across the board that both these businesses, other companies are performing well on asset quality front. So one should clearly avoid Manappuram. Thank you.
Good morning, everyone. ITC announced their results, and the company continued its good set of numbers, momentum this quarter also. Results were above expectations. Overall, the margins were better or at par with the last year. However, the main pleasant surprise came from the FMC business, which grew 30% on 2 years growth basis, and where most of the if FMCG companies are facing a margin pressure, the FMCG segment of ITC actually posted a margin improvement in 17 bips. And with the valuation of 19 times FY23, overall ITC looks quite attractive as compared to the other FMCG players in the segment. Lupin announced their results, and results were really below expectations. It was a miss all around on the all fronts. Sales was below, and even the margins was major disappointment, which came at 6% versus expectation of 13%. Though the company had posted amortization on Gevis. However, the operational performance looks very weak. We expect deep cuts on Lupin in today's trade. The con call is scheduled at 3:30. Probably we'll get some respite and some reasoning in that con call. But however, for today, the stock looks that it can take a good beating in today's trade. Pidilite Industries announced their results, and results were below expectations. Volumes had contracted by 3% versus street expectation of flat volumes. And the company actually missed its own guidance on margins, which they expected to be in the range of 20 to 24. This quarter, the margins have came 16%, so which is a decline and below the expectations. Phenolics Industries announced their results, and results were below expectations, mainly because of the margins, which came at 16% versus expectation of 21. Somani Ceramics announced their results, and like Kazaria Ceramics, we have seen that the real results here were also below expectations. Westlight Development announced their results. That's the McDonald's chain. The results were above expectations. And the margins have shown quite a good improvement at 16% versus expectation of 12.8%. The stocks remain expensive at 78 times. Despite that, we can expect some uh, good improvement on stock price. However, stock today, the market being very weak, we not might not see it in immediate basis, but over the quarter we can see some improvement on the stock. Granules announced their results, and results were above expectations. Though the sales was in line, the margins have improved because of the paracetamol prices. Panacea Biotech announced the results, and results were declining, and so were the Barbecue Nation Hospitality results were. Those were also below expectations. Aditya Birla Fashion and Retail announced their results, and results were above expectations. Yesterday, during the market, a news came about the Ruchi Soya, where the Patanjali, the main company, is transferring its food business to Ruchi Soya. That business is around 4,000 crores, and the company expected to grow by 20 to 25%. They are also changing the name of Ruchi Soya to Patanjali Foods. The deal is done at 1 times EBITDA, and the price comes to around 690 crores. So this is positive for Ruchi Soya, that is, it expands the overall portfolio of the products. Also, Adani Enterprises announced that they are falling into medical and diagnostic facilities through its newly incorporated subsidiary. So this is negative for Dr. Lal and Metropolis. Anyways, we are seeing that because of the higher competition, these companies have taken a quite a bit, and the stock prices have actually come down 40% almost from their peak high. We have seen Lupin, Tata MG coming aggressively in the field, and now with Adani, we can see some more pressure for these names. Thank you.
Good morning, everyone. Teamless has posted inline set of numbers both on the revenue and the profitability front. Root Mobile has posted okay set of numbers for the quarter, although the revenue has improved. However, gross margins remained stable. Stock is trading at a PE of 33.4 times FY23 EPS. Navneet Education has posted improved set of numbers both on the revenue and the margin front. Revenue grew by 38.1% Q on Q and 49.3% year on year. EBITDA margins has improved to 19.5% versus year of 17.4%. Stock is trading at a PE of 29 times TTM EPS. Explio Solutions has posted improved set of numbers for the quarter. Revenue grew by 7.3% Q on Q. Higher revenue led to higher profitability to the company. Stock is trading at a PE of 24.9 times TTM EPS. Thank you.
Yeah, good morning. JK Lakshmi Cement result was above expectation, mainly due to improvement in operational efficiencies, energy cost, and higher volume. Revenue came at 1498 crores versus expectation of 1466. EBITDA came at 276 crores versus expectation of 193 crores. Margins has improved significantly at 18.4% versus 12% sequentially. KCP result has improved. Revenue came at 522 crores versus 510 crores quarter on quarter. EBITDA came at 71 crores versus 60 crores sequentially. Margins have also improved at 13.5% versus 12%. Ramco Industries reported declining set of numbers. Revenue came at 305 crores versus 268 crores quarter on quarter. EBITDA came at 29 crores versus 33 crores. Ratnamani Metal and Tubes result has improved. Revenue came at 974 crores versus 927 crores sequentially. Margins have improved at 16.3% versus 14%. The company has also recommended a bonus issue in the ratio of 1:2. The record date for the same is 1st July. Apart from this, the company has also recommended dividend of rupees 14 per share pre-bonus. Shyam Metallics result was okay. Revenue came at 2857 crores versus 2578 crores sequentially. However, the margins have declined by almost 100 basis points at 23.2% versus 24.2% sequentially. Thank you.
Good morning. Sandhar Technologies announced its results. The results have declined on a YOY basis. Revenue came in at 684 crores, which grew by 12% on a sequential basis and 7% on a YOY basis. However, margins declined from 12% last year to 9.2% this in Q4 FY22. The company also announced a dividend of 2.25 per share. The stock is trading at a PE of 26.4 times TTM EPS. Thank you.
Yeah, now the results for next Monday. So Bharat Electronics is likely to report number on Monday, and the results are expected to be declining. The company has already declared the revenue which the company will be making in this year, and EBITDA margins are year on year are expected to come off from 28% to 25%. Then Birlasoft is likely to declare result. Here, quarter on quarter revenue is likely to grow by around 3.8%, and EBITDA margin is likely to remain more of a stable. So more of a okay set of number. Divi's Lab is likely to report number. Here, year on year revenue is likely to grow by 25%, and EBITDA margin is also likely to remain strong at is likely to remain stable at around 41%. Quarter on quarter, we may see some decline on account of maybe seasonality also, wherein revenue is likely to decline by around 10%, and EBITDA margin last quarter was at around 44%. So okay set of number for Divi's Lab. Then Graphite India is likely to report number, and numbers are likely to show improvement, wherein Q on Q margin is likely to expand from 15.5% to 21%, and revenue is likely to grow by around 14%. Then AG Infra is likely to report numbers, and numbers are more of a like a okay set of numbers, wherein year on year revenue and EBITDA is likely to remain flattish. And Kaveri Seed is likely to report number. Q4 is weaker for them. It's off season for them, and such companies generally report loss in this quarter. So more of a okay set of number. Year on year, more of a similar type of number is expected from the company. June quarter is their peak quarter, so expectation is that the June quarter will be better. Ramco Cement is likely to report number. Here, EBITDA per ton is likely to move up by around 115 rupees quarter on quarter. As such, company will be reporting the okay set of number. Most of the larger company has reported improved EBITDA per ton quarter on quarter, and similar thing is expected from Ramco Cement as well. Then Steel Authority, that is SAIL, is likely to report number. Here numbers, EBITDA margin is likely to decline from 15.5% to 11.5%, but because of the higher volume, EBITDA, absolute EBITDA is likely to remain flattish quarter on quarter. It's a okay set of number for the Steel Authority of India Limited. So that's all from us. Thank you very much, and
subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.